Now, the first part about both of these is going to be your expectation for the trade. That's always the most important factor when you're trading is your expectations. So that's a fundamental underlying to all of this, okay? Now, once you have your expectation of if it's going to be, a flip or a swing, or, you're going to short it on a breakdown or go long, or et cetera, okay? It's really about your channels and picking out where your supply and demand is, okay? Amazon was an awesome example today because it gave a picture clear setup. Okay, what's going on with this chart here? Let's see, extended hours. Okay. So like you take Amazon, for instance, today. Really, we had this channel here, okay? And what's neat about channels is you can see them get established very quickly. What I mean is that as soon as, Amazon makes it to this high up here within what was the first, 15 minutes of the day. Here's the close yesterday. Here's the open today. So huge volume spike at the open relative to the close yesterday. Just kind of trucks its way up. Maybe you catch this move, maybe you don't. But then it makes kind of this high and this down candle here. So right away, after this price action that you see, and even really it starts right here, because this is where you get your first pullback, and it shows you this level right here. Gives you your first kind of reference point. At the low was 234.05. And then you get this high up here. So this is what you can see now. This right here. Now, if I'm a trader and I'm looking at this, I want to focus to what was the most recent range. If I'm going to be flipping, I'm assuming you're doing this, you want to do this a lot of times throughout the day. I mean, why else would you flip? Why are you going to go through the hassle if you're not going to do it a lot? Okay, so the key is identifying this very early. The first 20 minutes of the day are going to dictate your expectations, okay? They're going, and you have to be able to recognize the supply and demand. Huge demand right here, this first candle, 232.25 on the low, high 234.77, close 234.50. That first pullback low was 234.05. So right away, I know off this pullback, we've got demand above 234 showing up. Okay, now we get this high, 235.75 to down here, the high was 235.46. So right away, I know 235.40 to 235.70, we've got some supply up there, okay? So I'm thinking my demand's down here, near the top end of this candle and the range of this candle, because look at that nice move it made out of that, okay? And my supply is going to be up here. And that's going to dictate how I trade, how I flip. moving forward, and I was doing this, I'm going to try and short it near the top of the range. I'm going to try and go long near the bottom of the range. Okay? The main point for me is this low right here, 234.05. Don't go below it. We can go below this low. We can even go below this low. Can't go below this low. Why am I saying we can't go below that low? Any guesses? Yeah. What's so significant about that low? Yes, what Penny said. It's the first low. It's the first low. It's the lowest low. We don't want to go below the lowest low. That's common sense. Why the hell would you want to go below the low? No. All right? This is the key, 234.05. That dictates everything you do on a stock like Amazon today. And for now, 235.75 is the key on the high side. So you play that range and you just flip that range, all right? Now we come back out a little bit. Look what we have going on here. So we were looking up into from 930 to 955 we were looking through. Now we're looking through to 1130. Okay. What do we notice? What are some of our observations? Well, the channel is playing out perfectly for a great part of the morning. We're just bouncing back and forth. You could be playing calls and puts all day on that. Okay. And then something key happens between 11:05 and 11:30. What is that we notice? Channel got smaller, tighter range, and was that tighter range closer to the top of the channel or the bottom of the channel? Yes. So remember, I want to put everything in terms of supply and demand. So we take what we said. The range got much tighter near the top of the channel after consolidating for 2 hours, hour 40 minutes or so. We take that and we say where there has been supply consistently moving the price back down to the 234.40-ish levels, we are not seeing that supply this time, and the price is actually holding, indicating that demand is starting to exceed supply at this level. Okay? This is a big development right here, and this is really key for how many times, guys, whether it's options or a penny stock, ask yourself how many times you've sold something at a breakout point, you know, only to see it just run away from you, and you're just sick to your stomach because it just runs and runs and runs, right? And noticing stuff like this is very important in ensuring that it doesn't run away from you, it runs with you, okay? So back out a little bit more. Oh, and then this is good right here. This is great. Let's go in here. Okay, so here we are again. Let's get our channel lines again. And this gets good because it makes a nice little fake out. What do we have on? No, I guess it doesn't. I guess it's still holding that level. Okay, I just got mixed up. I don't know how I feel about these new E-Trade tools. Kind of annoying. But at any rate, and then so right around here, what, 11:45, after we see that coiling action, it makes this high, right? Breaks above the key high of 235.75, but notice this high, 236 even. You know, that's not a nice high. Just kind of like to see it push above an even level like 236. But again, even on this pullback, it's holding the key lows, okay? And it is staying within striking distance of highs, okay? Furthermore, look at these volume spikes you got here at 2 o'clock and 2:05. That was your highest volume spike on the 5-minute chart in over an hour, all right? But there's something that I really noticed about this as opposed to this one. Anybody? Right, no price action, that's exactly right. And what does that mean, no price action? I mean, what's that tell us? What's it tell us about supply and demand? Right, equal, okay? And that's pretty good when you consider, you know, this 235 level, you know, it struggled with it in the morning. So you had a lot of volume come out there, but it got absorbed very nice. You know, that's a term I'll use sometimes. If I see this on a level 2, I'll say, oh, you know, Amazon selling got absorbed. There was a 10K seller that dropped down today at 235.30, just after it had made one of these moves here. Maybe it was this one. Yeah, and it ripped up to 235.60-ish, got near that high, and then came back down to 235.10. And I remember a 10K seller showing up on the ask. That's a lot of money. I mean, that's 2.3 million. And so, but it got absorbed so great. Like, look how well the price action got absorbed, or the selling got absorbed. So you saw that again here. And again, that's another clue that Amazon is, you know, while you can still flip this range, it's starting to give you some signals that a bigger move is coming, as evidenced by the way this supply zone seems to be becoming an area of new demand, okay? Or just exhausted supply. And then here you go, after 2 o'clock, I mean, look how low the volume is down here, okay? It's just, and what's interesting about that is we're at a price where supply volume has been forcing the price back down all day long. But now the supply is very low, even though we're around that 235.75 level that was significant from this morning from the opening bell. Okay, we're in the afternoon now, but that opening bell price, okay, where we ran to, that high from the morning, is giving us a big clue. Are we staying near that high? That's very important. The reason that's very important is because people watch for it, okay? And we all get excited when we see something stay near that high, because we know that we're all going to buy it, and that's going to cause the price to rise. All right, so you need to notice this. And then just when this volume spike comes in, like, it is go time, right? You're getting, if you take this, this is very important to look for. We always talk about volume on the daily chart. We want to see greater volume tomorrow than we did today. okay? You have to apply the same thing to your intraday trading. We're looking at a 5-minute chart of Amazon. We had great price action here, breakout above the high of the day, and the volume was the highest it had been on an up candle 5 minutes since 10:30 in the morning. Okay, so that's a great signal right there to go long. You're breaking above the high when there's been signs of strong demand at these levels. Okay, and you're seeing those signs confirmed by the excellent price action in reaction to the volume that came in. Okay. Now, had the price risen, excuse me, had the volume been high, but the price not really reacted that well, like up here, for instance, okay, or even up here, you had some wicks with these candles, but there's no wick with this candle, okay, and just boom, 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 just gives you that move from 235.75 up to 238.15, just ripped. That was great. And now we'll have some fun and look at how much money you could have made off Amazon if you can get these types of strategies down. And you know, it is doable. Amazon is very much in play. And after this, I'll go over some more specific and general sell signals. But Amazon today was especially a great example of how you can flip it and manage the stocks when they're moving very quickly. And also, as far as do you buy it at the first chance of a pullback, or do you wait to see consolidation? That's up to you. On something like Amazon today, that range did get established pretty quickly. Okay, and there you can just kind of buy it and then have your rule that, well, now if it falls 20 cents more, then I'm out, or if it goes below the midpoint of this candle, then I'm out. Or you can wait and maybe sacrifice a better price for a little bit more certainty. That's something I say a lot, and something that that's what you decide. That's what's nice about trading. You get to choose if you're going to buy it right away or wait to see some actual price action. The one thing I will say in regards to options is if you buy something and the stock's going to consolidate like this for an hour, then premium's going to eat away at you just naturally. So you gotta be on the lookout for that in regards to options. But as for penny stocks, what you will find though is sometimes, myself personally, I'll buy right away, because by the time, it's kind of intuitive, because by the time everybody sees the bounce starting to happen on level 2, the pullback like on APS tomorrow when they announce it, there's going to be those dips that always happen, and people chase those bounces, but some people are putting in their orders like right at the bottom, and it can be hard to get filled on the way back up. So it does take a little gut instinct and watching that level 2 closely to see for the first sign of a turn by one of the market makers. So that's certainly something that's different with penny stocks than options. Okay. And so check this out. So this is the 235 strike call from today on Amazon. All right, opened at $1.05, closed at $3.40. But if you just take this move that happened at 14.50, okay, that's your signal, right? that move you start getting at 14.50 on the chart. You look at the price of this option. It's at $2.44. From 250 to 345, this thing hit $3.90. Okay, $3.90. So, geez, that's what I mean. That's over a 40–50% move, and the stock only moved like 2%. 1%. I mean, that's pretty cool. So that's why, again, you'll hear me say all the time, I watch the same stocks over and over again because that's how I get good at flipping those stocks. I lost a lot of money on my first Amazon trade this morning. People in chat know I bought puts at the opening bell, and that trade didn't work. But I made all that money back and then some by the end of the day because I adjusted. I recognized the first trade didn't work, so now let's try the long side, see if that works. And that trade did work for me, okay? So I got used to it. And again, that's because I watch Amazon every day. And that, in the end, when it comes to flipping stocks, it'll be easiest for you to flip those same stocks that you're comfortable with and you get a feel for how they move. It's the same with penny stocks. Just pick the liquid penny stock and like play that one, and you'll get very comfortable flipping it. Okay, like what are some penny stocks? CHMR, didn't that one just make a sick move? Yeah, I mean, if you were playing CHMR all the way up here, you had a decent feel for it. And even on this dump, you still probably could have played the bounce from 83 up to $1.19, $1.25. If you had that familiarity level with it. What's another penny that's been pretty liquid? What are some other penny stocks that have been liquid the last couple days? Yeah, BBDA, that's right. That's been a great one. I mean, look at this. BBDA first stayed liquid. BBDA first got liquid in early June. I mean, just like I've been watching Amazon since April because this big move put it back in play. Well, if you're a penny stock player, BBDA came back in play right here in early June. Because if you look at the long-term chart, it goes through. It's one of those stocks that gets pumped. Because look, it got pumped back here in June 2011. Oh, that's interesting. They're pumping BBDA pretty much exactly 1 year after they pumped it the first time. Funny how that works out. All right. So don't think that when I talk about watching the same stocks and becoming familiar, I'm talking just about big boards. I'm talking about penny stocks too. If that's going to be your focus, that's what you got to do. This was in play right here. This volume definitely told you it was in play. Huge volume. Look at the way it held nicely on low volume, so low supply, even as it was, curling up. And boom, like, let's go. Look at that. I mean, you could have made your summer off BBDA. Just like I've made my summer off Amazon. All right. I mean, this happens. MDMC has been so liquid since July. You've been playing this. You can still be playing it. Dimmy has been crazy liquid. Even though it's down now, there's still liquidity. Like, it's okay to play pieces of shit if they have liquidity. Okay. BMPI, that's been a sick chart. You can be playing this one. So, the key is like, and you ask yourself, how do I miss these? It's probably because you're looking all over for them instead of just finding one and staring at it, all right? Like BBDA, okay? Because a lot of people didn't miss BBDA. The reason I know that is because the volume is ridiculously huge for a stock at 1 cent. So does that hopefully answers that question somewhat? And in regards to sell strategies and signals, etc. This is, like I said in the beginning, a lot going to be based on your expectation. My first sell signal that I have to consider is where I was planning on selling when I bought it. Okay. All right. And this is interesting because that doesn't mean you can't change this later. Okay. If, for instance, something, maybe Amazon, my intent was to sell it near the top of the channel, but I can change, but then I can come up with a different expectation and I can say, I'll sell it near the top of this channel unless it gives me a volume spike breakout, something like that, okay? And then I can target that 238 high from the other day, and the high the other day, yeah, this high from August 7th, 238. Once we broke above that 236.72 high, that was the magnet. All right, so you can certainly change that, but that is going to be your first strategy, okay? And that's going to dictate probably how you interpret signals in a way. Okay? And another great sell signal is high volume, very little price action at the top of a move. Or I shouldn't say at the top of a move. After a move. So like Amazon, okay? Here we go. Perfect example. So we get this huge move on high volume, right? Look at how high the volume is up here on this candle, but it's actually kind of a tight candle. And then this one's really tight, okay? And volume dropped off a little bit. So high volume, little price action, followed by a drop off, followed by a volume drop off, okay? That could be a good exit point because what that does is now you can say, just like we pointed out within the first however many minutes of the day, so just you caught this move, right? Here's your sell signal, this price action just stopping right here, okay? A lot of volume here. Okay. So right away, there's my channel. This 237.81 is the low, 238.14 is the high, okay? So that's I sell, and now I can say to myself, I'm getting out here, okay? If it breaks above this 238.13 high, I can chase again, if the volume lines up as well, all right? But if it goes below, now I'm going to target a pullback to maybe where some of this demand was here around 237.20 or so. And you see, we get the breakdown below and this pullback on high volume, but notice how tight the price action is on the way down. It's a great signal into the close. Not a lot of price action on the way down, which to me bodes well for Amazon at the open tomorrow. We'll see. But so of those two questions, is that pretty solid for people to hear? You want me to go over, or I guess, are those questions answered fully enough? Jeremy, it's not necessarily a reversal, but it's a you must notice, okay? Because it's your first sign. What is it your first sign of? We said it earlier, an equal balance of supply and demand. So when you see that high price action, high volume, little price action after a big move, the big move meant there was more demand than supply, okay? But now we're up here and the volume is still high and the price is not reacting anymore. That means now we're running into more supply. That's what you have to notice. So it's a sign of potential reversal. Yeah, some level 2 signals when it comes to selling. That's a good point, J. Ken. Some level 2 signals in regards to sell signals on level 2. Okay, this would be much easier to show during the day, but just in general, like if there's not a lot of market makers on the bid as the price is going lower, okay, or as the price is going higher, there's not a lot of market makers. There's only, it seems like maybe there's only 1 or 2 market makers supporting the price. Right? You want a lot of market makers. You also want to see a lot of retail market makers. So you want to look out for Night, E-Trade, Auto, or I guess it's ATDF now or whatever. You want to see those market makers bidding because they're retail. That's you and me. All right. We don't want to be playing with just market makers. We want to be playing with retail too. So you got to pay attention to stuff like that. MDMC, that was for those of you who watch. No, not MDMC. Dimmy. When Dimmy was in the 14 to 17 range, does anybody else remember how like Knight and E-Trade weren't participating on the bid at all? It was all just BMIC or BMAS or one of them. Anybody else remember that? Yeah. So, that was a signal that retail wasn't participating at those levels, and that was a big red flag. Because market makers, they'll short that shit. They'll short that thing to 0. So, yeah, so stuff like that, that's really valuable. And just like Chalk said, paying attention to who's kind of running the show. It's like in sports, you game plan for the best players. So if you're watching level 2, like on APS, you always look for WDCO. Pay attention. Some sell signals might be if WDCO isn't on the bid or if he's on the ask or something. If a market maker might be diluting. We have numerous videos on how to spot dilution. Go to our trading university. You got to be able to pick up when a stock is moving, but then it seems like a market maker starts to dilute. Okay. Spray, that's a good question. When market makers join in on a stock, I don't know if it's a good sign or a bad sign. What I know is the stock is likely to get more liquidity. And liquidity is good, so I guess I would say it's a good sign. Because liquidity is the #1 thing in trading. But they could be showing up so they could short it. Okay? That's why you just got to watch. Your best learning is going to be from watching. Okay? All right, let's do a couple charts now. GYSR is the first one. I guess that person means GYST. That would make more sense. All right, so GYST is another one that, like BBDA, like there's some serious liquidity, and this liquidity really started at the end of May. Okay? So right then, at the end of May, GYST was one you could have been keeping your eye on because there's liquidity and it picked up again in June. All right? Then July started to rally a little bit. So yeah, it was getting dumped, but it was still, the liquidity was there. All right, so you don't have to buy it, but just keep an eye on liquid stocks. It's always, you can't do anything wrong by keeping an eye on liquid stocks, whether they're going up or down. I like that. I'm going to write that down. Oh yeah, I suppose I should say. Okay. So GYST, here was the big spike on August 10th, just monster volume. Okay, so that's where I'm going to put a key top at. That was at 157. And if you look, that's really the breakout point that once it broke that yesterday, now it's just kind of been running really nice. Just take a look at the 15-minute chart. All right, well, first of all, what I noticed is last Thursday it was in the 007 to 14 range, and it traded a ton of volume. Every last person at that level was up 100% today, and the volume is lower. Okay, volume's getting lower as it's going higher. All right, don't like that. These people looks like they're taking profits, and then again yesterday you could have been buying between 1.4 and 2.1. Those people, some of them were up 100% today also. So there's a lot of people in this stock that are up 100% in the last 4 days. All right, that has to be the first thing you notice. If that's not the first thing you notice when you're looking at a stock, you have serious issues with your trading observations, because not noticing stuff like that is how you get caught bag holding. All right. Now, it doesn't mean you can't trade it, but you have to be aware. I see this high right here. This was yesterday's high. That's at 234 or so, 235. So that's my key support level for this move. The reason it's my key support level is because I want to see previous resistance turn into new support. Below this 235 high, I could see it pulling back to this low here at 1.7. This is kind of going to be my channel with GYST. Okay? And then we've got kind of a, so this would be my demand channel. And then up here, we've got this high at like 3 cents. Up to, there you go, up to about 3.5. Okay? In between here, it's just kind of, you could maybe buy it here near this support, but you know, this is one of those areas where you'd have to make a decision. Am I going to wait to see what it does, or am I going to just buy it right away? You know, those are things you have to decide as a trader. And you know, or if you're buying here, do you sell if it goes below here? Do you wait to see if it holds this level? Or if you're, you know, are you going to buy it on this breakout, or are you going to wait for this breakout? That's all stuff you should be thinking about and deciding. And I can't really tell you, and nobody can, what decision you should make, because otherwise you're not going to learn what type of trader you are. Okay. So, and then once you find that out, then you can adjust and really start learning from mistakes that you make. So GYST overall, this key resistance is going to be this 3 to 3.5 range, and then the first key support is really 2.3. Today, this low here at like 2.5 from the mid-morning, watch that in the morning. If it can hold 2.5, that'd be great. That'd be a higher low versus the high from yesterday, Tuesday, and that would set it up nicely. But like I said, these people are up 100%. Volume is slowing down a little bit. Would like to see volume, you know, greater on that 15-minute. Also, keep an eye on BBDA. These charts have very similar patterns. Okay, they've both gone parabolic. A lot of the money from the penny market is in both of these stocks. So you know, if BBDA goes down a lot tomorrow, GYST might go down a lot. Or if BBDA keeps going, GYST might keep going. Or, you know, awesome penny stocks and penny pick or whatever, if they come out with a pick, both of these stocks might tank as people cash out to put all their money into that, you know. That's why I didn't take anything for a gapper today, personally. Got to keep stuff like that in mind. IFLM, this one isn't coming up accurately on E-Trade, so I'm using this. Looks like it just got dumped today. Might have been some promo. Did notice they put out some pretty fluffy news the last couple days, though, so it's worth keeping an eye on. But right now, there's just not enough from the chart. You know, see if it can hold today's low of 4 cents. Or, you know, can it trend above 5 and trade on some volume, you know, between 5 and 7 and curl up. But we need to see more from this one. But it is worth watching because, why? Because there was liquidity. Even though it got dumped, there was still some liquidity out of nowhere today, and we always keep an eye on those. So, to be continued with IFLM. IMOS. Okay. Shipmos Technologies, Bermuda. Interesting. Well, what I like is this huge influx of liquidity here last year. And I like that started to pick back up again here in July. And even though it's well off of its highs from the year, it closed 2011 at $5.10. So it's still up 120%, 40% on the year. That's impressive. Okay. Again, 3-year chart looks good also. I like these. You see how it bounced out of this, you know, range here from 2011. Definitely nice right there. All right, but focusing more on the short term. Looks like we got a nice trend line breakout. Let's see if we're above this one. All right. So you can see here with these 3 highs that form this downtrend line, this $14 level is really key. That's where that downtrend is. But we did break this one here, which looked robotic in a sense. It was almost too perfect. Just how nicely it downtrended. Now, what I noticed, haven't had a 3-day losing streak in this stock since July 5th through the 10th. That's good because just before that you had one a week and a half prior, and before that you'd had a couple within another span of 2 weeks. So the volume pattern here is very nice. All right, the price has reacted very well, going from 825 up to 1350. That's a great move. Now you got to try and see where could this thing realistically pull back to and offer an entry point. And I would say it's right around this high. This was a high that it struggled with here and then broke above. So that's right around 1115. So I would look to see if this doesn't pull back towards that 1115, 1120 level. Okay. Or maybe if it can hold above 12, that'd be good. You know, nice round level. But if it broke below 12, I would look for 1120s or thereabouts. maybe it'll just go sideways, all right? And then what do you see there? What do you want to see? You know, obviously you got to break above this high. This was the highest volume on a down day that it had is of the month since July 18th, and the price action was pretty bad too. Okay. Also, notice these last 4 days, even on high volume relatively, it's kind of just been in the same range every day. Remember, price action stopping doesn't necessarily have to be in one day and one candle. Price action stopping can be 4 candles like this. Okay? You can see here we had up action, up action, up action, day after day. But then here now, 1232 was that low, 1242 this low, 1255, 1245. So these lows are all pretty much within 20 cents of each other. These highs, 1343, 1336, 1342, those 3 highs are within 5 cents of each other. So even though there's action on a day-to-day range, the ranges are wide, the price action over the last 4 days hasn't been that good on high volume. It's just been going back and forth. That's after a big move, okay? So that's your first potential sign of a reversal. Now, if it can break, if it can close above 13 and drip towards that high, that's when I would look to maybe look for some momentum on a breakout and target that $14 level, and then this key high, 1471. Let's look at the intraday. See if we see any key levels. So not the most liquid stock. That's something you've got to notice. It is liquid, but not incredibly liquid. So overall, nice pattern. Higher highs, higher lows. But like I said, let's see if it can bust out of this range and hold 13 with some consistency. Okay, SPY. I'll do SPY last since that's the overall market. And I'm not going to do this, but we did cover it a lot in detail. PRI. First thing again, I notice here is not very liquid, but nice chart. All-time highs. So they must be doing something right. Stocks at all-time highs, it's always a good sign. Well, that's debatable, actually. Nice uptrend off of its June lows. Flirted with it, but real strong bounce on great volume. Again, an awesome volume pattern. Hasn't been down 2 days in a row since July 20th and 19th. So that would be your first sign of maybe a little reversal, a little pullback, is when it's down 2 days in a row, finally. Okay. Certainly, you know, the trend, I'm not saying you should short it because the trend is great and it's clearly higher, but just if you're trading it day to day, you know, that could be a pullback entry possibly on that 3rd day or 4th day, because then you would know that it hasn't been down 4 days in a row since May. Okay, I like betting on things that don't often happen to not happen. Okay, so that would be the thinking with something like that. Really, I mean, this low is key, 28.30. Okay, and then this high, 29.13, and then $30 just psychologically. Okay, so 28.30 is the key low to watch here. This isn't a very tradable stock unless you're catching it on these liquid days. But like today, you can see it only traded 240,000 shares. That's not that many. It's not that much money. There's penny stocks that trade more. Also, what I notice is high volume red days haven't affected the overall chart. And does anybody recall a stock we talked about a while ago, maybe a month or two ago? I said the same thing about another stock that had a lot of high volume red days. Anybody remember the symbol? It was DDD. DDD, we said high volume red days do not affect the stock. And we said that when it was right around here. We said high volume red days do not affect the stock. And if you look at DDD, look at this huge high volume. You had a high volume red day here and here. And the stock is still pushing at all-time highs. So we've still yet to see a high volume red day really affect the long-term structure of the chart. All right, SPY. Well, guys, unfortunately, talk about liquidity. I mean, SPY is just fucking terrible right now. I mean, there's no liquidity since August 6th, really. And this volume is the lowest it's been maybe all year. Oh, yeah. I mean, this volume is similar to end of December. Okay. But, you know, that's maybe to be expected. I would expect liquidity more to come back September. We've got the election coming up. That's going to start being the big headline. I mean, obviously, that's going to be the gorilla in the room is the election. And, you know, so I definitely expect liquidity to pick back up in SPY. In the meantime, it's just not offering that great of a setup until it breaks these highs consistently. It really needs to push away from 141 with some emphasis. The high yesterday was 141.38. It tried. Let's look at the 5-minute chart the last 2 days. Yeah, see, notice this gap. Notice how it got sold into. It opened at 141.29 yesterday and then printed 141 teens like right away. Right. That's much different than some of the gaps we've been seeing on Google the last few days, where it's gapping and running, right? Okay, so until SPY can really sustain above 141.20 on some good solid demand volume, you're not going to get much on the long side. Now, if we do break that 141.20 though, I'm going to look for 142s and you know, got to challenge this high, because the problem for the bulls, if they don't challenge this high, is now you're looking at a really bad just kind of double top. And the bulls don't want to see that. So they're going to have to push through here. It's, you know, they've come this far. We'll see. Now, the other problem for bears, and the reason I wouldn't say you get a great move on a breakdown below here is because I just feel like there's so much demand down here from people who missed this move. And this is going to 127 to 141 in 2 months. I mean, there's a lot of people who didn't catch this market this summer, and they're going to have to show some performance the latter part of the year, once, you know, going into the end of the year. So, you know, I'm just kind of in wait and see mode for SPY. Wait for some liquidity, some volatility to pick back up, and let's let it show us a little bit more. I don't really want to get caught in SPY in either direction right now. So I'm watching it daily, but I'm not so much as trading it. The ranges are pretty tight. 60, 70 cent range today, 100 cent range yesterday, 80 cent range, but that's compared to some of these $2 ranges we were getting, you know, throughout the June and July months, which is why playing when there's volatility is so important. You can't be afraid of volatility, guys, upside or downside. All right, Amazon. There's something I love about Amazon right now, other than the fact that's the only stock I make money on. You've got this action here. So we've got these two big moves, right? Approaching this all-time high, 246. We've got the one from, from 105 all the way up to 246, and then even here 160 up to 246 or so. And that took 8 months or so. Made a really big move. We're looking at a 3-year weekly chart, by the way. Should have said that right away. And it gave up a lot of that. Okay. And now we're approaching that all-time high again, but there's something much different between this time and the last time. Similar to something I explained on Google months ago. Going up to this high, there was a lot of just that. There was a lot of going up. Okay, the price rose from 160 to that 246 high. So there are a lot of people with profits. There wasn't much sideways action compared to this period since the last week in April. So 3 months now, Amazon's essentially just been range bound between 210 and 230-ish, with some breakout above 230 and some breakdown below 210. So people are in at more of an equal price as everybody else. So what that's going to do to me is that's going to limit how much supply there is up here relative to September, October 2011, when there was a lot more supply because you had people with a lot more gains from the very immediate past. Whereas now in the immediate past, people aren't sitting on a ton of gains with Amazon. That's really key. That's a key distinction to me in terms of supply and demand. Amazon today, 237.42. That's an interesting level to close at, because this close here at 237.32 had been the highest it closed at since October of 2011, but now with this close today, it has accomplished that. It's now at its highest. Amazon is at its highest closing level since October 2011. To me, this level's a magnet. I mean, the all-time high is a magnet. The volume pattern on Amazon is beautiful. This is 2 gaps now that it didn't all the way fill, showing that there's very strong demand. Lots of wicks on these candles when it tries to go lower, showing it's always getting kind of bought. The dips are getting bought, causing wicks to be created. So, just wait for it. Look, 218.14. Break that high tomorrow and chase it. That's what it comes down to with Amazon. And if it stays in that high, if it stays below that high, but holds on to half of the range from today, so 232.25 to 238, so that's what about a 6-point range. So 235.25 maybe is where I'd look for Amazon on a pullback. And what's interesting about that is 235.40 was a really key resistance level all morning this morning. So 238.14 watching. And above that, 240s are magnets. Below that, watch that 235 to 235.40 level. Anything higher is a higher low. And that's bullish. A 3% move in Amazon would mean 245 for the stock price. 245 for the stock price would mean the 240s go to $5. They're at 85 cents right now. So that'd be a 400% return. So those are the ones I'll be eyeballing to see what Amazon gets up to. All right, guys. That was it. Hope everybody enjoyed it, got something out of it, learned something new, caught up, refreshed their mind on something they already knew. I'll see you guys tomorrow.